Hi friends, welcome back to my YouTube channel Police Trading Academy. Today we will going to see very interesting topic, option buying. Option buying, by using checklist we can use before punching the order. Let us look into that. What exactly? Actually, option buying can be a complex financial decision, and it is very crucial to have a checklist to ensure you make informed and strategic choices. Here, a checklist you might consider before placing an order to buy an options. Now let us look into that. What are all those checklists? These are all 15 checklists. Mainly we will be using before punching the option orders. Let us deep dive into each point one by one. First one, underlying asset analysis. Every one of us already know that Nifty and Bank Nifty are very famous instrument. Generally, the people will enter into an option buying. But unfortunately, we are having everyday expiries. Now, because of that, there is a huge volatility in the market, due to which there is a unwanted spikes, especially in the Sensex, BankX and all, and even in Nifty. Huge volatility is observed. For that reason, before entering into any instrument like Nifty or Bank Nifty or Nifty or BankX or Sensex, please understand that what kind of volatility expectation is there in each assets. Based on that, as a beginner, especially option buyer, please understand that which instrument we have to choose for an option buy. Lesser the volatility, better for the option buyer as a beginners. Next observation, market outlook. Now here, actually market outlook is very important aspect before going to take a trade. Whether market is bullish or market is bearish, we have to be very cautious. Actually, option buyer need a strong momentum, whether upside or downside. If market in between sideways, if it is there, option buyer will going to lose his money. For that reason, we have to be very careful while selecting an instrument on particular days. Option buyers, every day they should not trade. Main reason, 70% of the time market will be in sideways trend. Only 30% of the time market will be on either side trending, either bullish side or bearish side. Based on this market outlook, we have to take a trade. Next one, option type. What type of option we have to select? Either call option or put options. C and P we used to call. Once direction of the market is fixed, if it is a bullish side, we have to choose call option. Then if it is a bearish side, definitely we have to look at put options. After this, we will going to understand about the strike price. Which strike price we have to select? As an option buyer, always we have to target either ATM or ITM. We should not see OTM options. But unfortunately, in the stock market or especially in the option market, most of the retailers they used to take OTM option. But problem over here is there is one enemy over here. The enemy is theta. Theta is the biggest problem here. Due to that theta, there is a huge problem because the theta value of this option, OTM options, we can observe over here, both call and put side, the theta value will be very high. Theta value in the sense, for example, if you would have taken option premium of 10 rupees, imagine put side or call side, you would have taken at 10 a.m. imagine, you would have taken at 10 a.m. Even market moves on one direction slowly. I am talking about slow and steadily. If you would have bought call option of 10 rupees, even market is moved slow and steadily, you will going to lose money. You might have wondered how exactly the premium is not shooting up. The main reason is theta. Because the time value we used to call. Always we should remember ITM and ATM option will have a lesser time value compared to OTM options. For that reason, we have to choose ITM or ATM options for option buying. Based on that, we can decide what type of strike we have to select. Next one, expiration date also very important. I already discussed each day we are having expiries. Monday is mid cap, Tuesday Fin Nifty, Wednesday Bank Nifty, Thursday Nifty, Friday Sensex and Bankex. But the main problem with this everyday's expiry is there is a huge volatility on both call as well as put side. The main reason, you could ask the question there, why exactly if mid cap Nifty expiry is on Monday, I will use Bank Nifty or a Nifty. You can ask a question over here, but the problem here is the mid cap is also, it is interlinked with Bank Nifty and Nifty also, because some of the stocks are directly or indirectly linked with Bank Nifty and Nifty, due to which there will be a volatility spikes can be observed in other instrument also. That is why we have to be very careful while selecting the expiration date for each indices. Next one, PCR and open interest. We used to call PCR is nothing but put call ratio. Put call ratio is the ratio of total trading volume of put option to call options with a specific time frame. This is very important aspect, especially to know about whether market is on direction, put side or call side or sideways. The one important aspect we will be referring for that is put call ratio. Put call ratio we can able to see here. Here is around 0.75. When put call ratio is more than 1.2, we consider as bullish. If the PCR is lesser than 0.75, we used to consider as bearish. In this sense, if PCR is between 0.75 to 1.1, 0.8 to 1.1, we consider as sideways market. In this sense, we can decide whether market is sideways or bullish or bearish. To know that, always we should wait for 1 hour. To market to settle, right? But most of the time, the retailers, they immediately jumped at 9:15. Now this is the biggest problem. The most of the traders, they will lose their money. Please remember, always we have to wait. We have to give some cooling period of about 1 hour. After 1 hour only we have to take a decision. By that time, we will have a very clear trend with respect to PCR and even price action. All those things will support you whether I have to trade today or not. Whether bullish or bearish or sideways, all those data will be printed on chart, as well as we will get the information through PCR also. Most of the time there is a say, the market is opened by retailers, means the retailers will open the market by 9:15. The same thing, the market is closed by professionals. Now this is very important, and it is a true aspect of stock market. Please understand about that. Why this 1 hour is very crucial. Okay, based on that we will go to trade. The next part of the presentation we will see that. Next one would be price action. What exactly it is price action? Price action, everyone of already we know that the horizontal trend line as well as and inclined trend lines. Support and resistance. The conventional support and resistance we used to call it as horizontal trend lines, or horizontal support and resistance we used to call. In another word, the inclined support and resistance we used to call it as trend lines. Now each price action trader will have a different type of pattern. Some people will be understand the price action with respect to some indicator based, but most of the time, instead of looking indicators, please understand some kind of supply and demand concept. Based on that, please draw support and resistance. Further, if you want, you can extend by using these trend lines. After understanding these trend lines and all, we can take a trade with respect to that. Next one, candlestick pattern. How exactly candlestick pattern will affect our trading part? Let us look into that one by one. Actually, several candlestick patterns are available, but some of the important candlesticks are shown over here. Here, hanging man, hammer, bullish engulfing, shooting star, dark cloud cover. These things and all, based on this pattern, we can take a trade, whether bullish side or bearish side, depending upon that. One of the example I will explain over here. Let us look into that. Shooting star. Shooting star, please mark high and low of this candle. Once these 1, 2 and 3 candles are found, imagine. Please mark low and high of this particular candle. Okay, once you mark the low and high of this candle, once this low is breached or broken decisively, please enter put side. Then put a stop loss either 50%, or if you are a risk taker, please put a stop loss above this candle. With respect to that, you can ride a trend. In this fashion, even the candlestick will give you clear indication of a trend, whether bullish side or bearish side. Likewise, even candlestick will help you to take a proper decision while doing a option trading. Next one, we have to understand about volatility. What exactly volatility? The volatility, in other words, we used to call it as fear index. Generally, India VIX, we will going to observe to know about volatility. Whether our market is less volatile or more volatile and all, we can track this India VIX in TradingView terminal. You can observe over here, There is a sudden spike during Corona or COVID-19. You can observe the VIX are shot up by 86.63, but most of the time VIX will be settled in between 10 to 20 or maximum 30. But during Corona crash or COVID-19 crash, there is a sudden spike with respect to the VIX. Actually, for an option buyer, once you take a trade here, whether call or put side, if VIX is going up, option buyer will make huge money. On flip side, option seller will lose huge money if IV shot up after entering the trades respectively. That is why VIX or implied volatility is very important before taking, even before taking as well as after taking the trades. We have to be continuously tracked these volatilities with respect to India VIX. You can observe how volatility or VIX is affected the trading. You can observe these are the comparative graphs. This is VIX 1, candlestick 1. This is the line graph is Nifty 50 stock, Nifty 50 line. Here we can observe there is a huge difference. You can observe during Corona or a COVID fall, you can see Nifty 50 sharp fall, but on the same opposite to that, there is a sudden spike with respect to the VIX. Now in this way, the index chart and VIX will be inversely shows its movement. If Nifty is going down, definitely most of the time VIX will be going up. On another side, if VIX is going down, the Nifty is going up. In this fashion, we have to understand. You can see the lowest VIX, it is staying around 10 to 15. During that period, we had seen the lot of movement on upside, especially in the Nifty 50. Next part of the presentation would be risk reward ratios. What exactly risk reward? Whenever we take a trade, always we have to maintain minimum risk reward of 1:2. In this particular trade, we have kept risk reward of 1 to 6.5. Minimum 1 to 2 risk reward is must. 1 risk, 2 reward. Even if you lose 2 to 3 trades, easily we can come back to break even and even we can make a profit. In this connection, risk reward plays a very important role, especially for an option buyer. Next one, capital allocation. Most of the people, they miserably fail due to this misconception about capital allocation. But actually, the capital allocation for option buying should be not more than 10% of your total trading capital. For example, you are having 10 lakhs capital. Imagine 10% of that would be around 1 lakh. Is 1 lakh should be the maximum capital should be deployed for an option buying. The remaining capital, 60% we could put it for an investment. Remaining 30% we can make it as option selling to generate regular income. This regular income strategies and all I will going to cover in the next upcoming videos. If you are new to my YouTube channel, please do subscribe and click the bell icon to get regular notification. Next, again this option buying 10% again we'll be splitting into 5. Trade 1, trade 2, trade 3, trade 4, trade 5, like this. Again 20% each trade we will be bifurcating. Means for in each option buying trade we will be using from 1 lakh we will be using 20k for each trade. In this way, we can distribute the risk appetite of each trader to protect their capital first. After protecting their capital, definitely you can make consistent income even using option buying also. That is why this capital allocation is very important aspect. Please understand and do proper research before taking a trades. We are not a SEBI registered research analyst. Please, before considering any trades or recommendations, please do proper research and consult your financial advisor. Next, commission and fees. No, always option buyers, they never end up with one trade, two trade, three trade, four trade like that. They will continuously take a trade. If you are working with respect to discount broker, you may charge with some flat price. Okay. Due to that, definitely if you would have taken 4 trade, 1, 2, 3, 4, 5, so on, definitely you will end up with huge charges. Brokerage and other STT and other charges will be very high. Even if you make 500 rupees, 1000 rupees profit also, it would be, after deducting all these charges and all, it will become negligible return of money. For that reason, we have to be very, very careful while taking a trades. Before punching the order only, we should decide how many trades I have to take in this particular trading day. Next one, always for any business or any trades, exit strategy should be there. Exit strategy in this sense, we have already discussed about stop loss, entry and target. 1:2 risk reward, I talked about that already. Please maintain this 1:2 risk reward. If stop loss hit, exit the trade. If target hits, please exit the trade. Or if you want, you can trail the stop loss till here. Even the stock, it bounce back, even you will end up with at least 1:1 profit. In this way, we have to use the exit strategy also. Stay informed always. Please understand that day-to-day market news, global events, any Fed rate interest rise or any RBI events, especially related to India, like that, or any global issues, any war or any kind of Federal Reserves or any kind of crude oil related issues, like this, we have to be updated ourselves by using different platforms or news channels. With respect to that, we have to update ourselves with respect to the our trading performance. Always we have to aware all those things, because those information or news are which will going to affect our trading performance. Risk management. Now this is very important. Already I told you, without a stop loss, please don't enter into option buying or option selling. Immediately after executing your order, please put a stop loss of so and so points based on your risk tolerance. Once you keep it, even stop loss you put it, target also you put it. If with respect to 1:2 risk reward minimum, I am talking about. Preferably 1:3 is the best, but worst condition, even 1:2 risk reward if you are putting also, no problem. Put a stop loss as well as target. If stop loss hit, please exit. Even if it is a target hit, please book the profit and keep the capital for next trading with an higher probable trades. Likewise, we have to maintain our risk, especially with respect to option buying. Next, we have to educate ourselves We have to continuously learn the trading strategies, because 5 years back, if you observe the movement, especially in the Nifty or a bank Nifty, the movement was very, very smooth. But nowadays, there is a abrupt spikes are coming day to day basis due to everyday expiry. For that, the old strategy, it may not work for today's market move. For that reason, we have to understand today's market sentiment. Based on that, we have to strategize our trading orders in such a way that the lesser number of stop loss should get hit. The first and foremost thing is protecting the capital is very, very crucial and very important point, rather than only getting profit. First protect the capital. Later, please target for an high probability trades. Based on that, we can make consistent income with respect to option buying also. Next, regularly review and reassess your option positions. Please make a trading journals day to day basis. Please write down what all the flaws are observed over a period of time. Why stop loss got hit? Where did I enter? Where did I took entry? Where did I exit? On chart, please mark it and save it somewhere. Based on that, later on you can reassess and review those strategies and improve the strategies and try to incorporate into the trading. Then disclaimer. Remember, option trading involves a significant level of risk, and it is essential to be well informed and cautious. Consider consulting with a financial advisor or conducting thorough research before making any options trading decisions. We are not a sub-registered research analyst. Any recommendation, any calls, if you are observing in a learning platform, if you are using into the real trades, please do proper research and consult your financial advisor. Thank you for a kind support. If you are new to my YouTube channel, Purist Trading Academy, please subscribe and click the bell icon to get regular notifications. And also you can join my trading channel, Purist Trading Academy Telegram channel. It has been given in the description. Please join over there. I am going to teach you some more in-depth concepts about options, especially with respect to Nifty, Bank Nifty, USD/INR. Based on that, so many strategies I am going to teach you. I am going to educate you how exactly you can make a consistent income through an options. Thank you one and all. We'll be meeting you with a new video in the upcoming sessions. Thank you everyone.